All right. Good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Agent Session. I'm your host for tonight's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And as always, we are happy and grateful for each and every one of you being here with us this evening as we take a look at the technicals and the fundamentals to see what we can take advantage of in this amazing Forex market. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. That is how we ultimately learn this thing that we call the Forex market. So if everybody can hear me loud and clear and you are ready to go, let's do a quick sound check. Drop me a one in the chat if you can hear me, especially on a day like today with so many internet issues, cold and windy, ice storms up here in the Michigan. But then just across the way in Ohio is 70 degrees today in some parts. So you tell me, I don't know what's going on, but hopefully the spring is just around the corner. So let me see. Oh, we have ones in the chat. Okay, so we are all good. So guys, just bear with me if things start to slow down, maybe get a little choppy. We're still getting some pretty high winds up here and temperature fluctuations the whole nine. So let's go. Okay, so let's get out of here and move some things around and take a look at the Forex calendar from today. And we've got GDP numbers that came in, revised numbers quarter over quarter, came through just slightly off, not by much. It was 2.9%, came in at 2.7. But we look here at unemployment claims, right? That's a good number. The forecast was 200,000 for the United States, came through at 192. So the economy continues to rock and roll. All right. GDP preliminary price index Q over Q, 3.9%. All right. So things are still sticky, right? Which is, hey, the Fed has been right so far, has been right. And we've got the Bank of Japan, the governor, the designated governor, is that Ueda, I believe he spoke, and just some notes, just trying to get an idea with the new leadership, what could possibly be coming with the Bank of Japan. So you can see here, inflation rate is peaking out. Prices will continue, but rate of inflation will slow substantially from next CPI data. DOJ can move toward normalization if stable 2% in sight. If appointed as governor, I will consult with other board members, and if judge needed, consider conducting comprehensive review of policy framework. If trend and inflation improve sufficiently, the country should proceed towards monetary normalization. We'll see. We'll see. That's kind of mixed a little back and forth. Might be more of the same coming out of Japan. A lot of people think it'll be big changes, but I don't know coming from that, right? Kind of keeping the cards close to the vest on that. So wouldn't go too far in the reading into what he had to say today. Let me see here. When we look at where are we at? Thursday, PCE, core PCE tomorrow for the United States on Friday. That's going to be something very, very important to look at for tomorrow, as of course we're still trying to figure everything out with this inflation. But to tell you the truth, though, everybody, the Fed has said what they have said. They're going to continue to raise hikes to raise rates and hike them to where they need to get 5.25. I know the next 3 meetings, you're probably looking at 25 basis points. It is what it is. I don't see anything really changing that, and as a result, you've got the dollar index moving to the upside. Come down to Atlanta. Nice weather. I know, man. I know. I know. We got power outages all over the place. It's crazy. Crazy. My partner Ryan power is still out. So, keep Ryan in your thoughts and prayers. I know he's on here listening in. So him and his family's trying to stay warm, right? But hopefully, like I say, spring is just around the corner and we get some weather. I know it's almost baseball season, so that's a good sign. All right, so there we are. Their trading economics, just US GDP growth revised lower in the fourth quarter. We saw that number. Japan inflation rate highest in 41 years. It was the highest in 40 years not too long ago, but they continue along their path. So it is what it is. They don't know how much to read into that. And then we've got the U.S. jobless claims fall unexpectedly. So we do see Wall Street ends higher amid uncertainty. That just keeps bouncing back and forth. Ryan, yeah, man, we're kicking in the dark for today. for day two. For day two. Well, hey, Ryan, your commitment is real, brother, because you are on here with us from the cell phone. I'm assuming. So appreciate it, right?
No doubt, man.
Everybody try Ryan some good luck sevens in the chat. That power somehow comes back on before Saturday or Sunday. My goodness. Yeah. Yeah. So that's it. Ryan, while you're on here, anything that you saw today?
No, honestly, I didn't get a chance to look at much, but nothing. As far as my alerts go, nothing came across that was anything really big. Also, we
Yeah.
already covered.
Yeah, I got you. So yeah, so one thing that I will say, right? And those of you, thanks everybody for all the sevens. So for all of you who have been with us for some time, and hopefully some of our newer members are really starting to see the reason why we call this the home of the 80-20. You know, we really put a lot of work into developing the strategy, something that was the surface concept was taught to us by our mentors at MTI as just it being one of the trading sweet spots, in addition to other trading sweet spots, but we tend to home in on this, did the back testing, and really see that over time how these 80-20s play out. So you can see that despite the news, Wall Street ends higher amid uncertainty, you know, and it's been that back and forth. One thing's for certain is that when the price action hits this zone that we coined the 80-20 zone, it puts in work. All right. So I want to go over first as we go through tonight. I usually do these Thursday night sessions, usually spend some time going through a ton of pairs and we get through quite a few as we wrap up the week. But I want to start out by looking at some of a lot of the 80-20 plays so that you all can continue to train your eyes to and then hopefully build confidence to where when you see it, right? When you map things out and you do your work over the weekends and you're looking at your setups and you do your support and resistance and everything, that when you see these opportunities, right, they're not to be taken lightly. So as always, right, let's start with the DXY first, and we can see that we've got some good bullish momentum that's continuing. That's continuing. Just like that, we found that support, right? When the bottom was falling out of the dollar, we could see it found support and it made the U-turn. Okay, so there's no doubt about it right now. We'll see what happens with the core PCE tomorrow. That can create some volatility for sure, depending on how that comes out. But we can see how this, right, even on the DXY, even though we don't trade it, we look at it to gauge dollar strength against the other major pairs. Okay, we can see, right, that that's an 80-20 scenario. AB boundary, break of the B boundary, hardly didn't get any type of retracement, but then look at the bullish momentum, how it stalled. Okay, and we move to the downside. Okay, other thing we always talk about when we're talking trading with the trend, as long as it doesn't take out the A, has no choice but to go your way, right? So we almost came down, took out that A boundary, and right now we've got price U-turn. Okay, so we broke it back above this 12,864 level, retesting that level, and see if we can get it to move back up to resistance. So right now, overall, we have a bullish dollar. Hold on 1 second. Oh, so we come in and look at the US 10-year, right? We've got the overlay with the 2-year bonds, and we can see we've got a bit of a corrective action, some corrective action going on now, right? Doesn't go up forever, but you can see where at that high 3.97, almost 4%. So we're getting there. So we're seeing some corrective action now, right? So we want to pay attention to that with the bonds ahead of tomorrow's PCE data coming out. But we know we still have a fairly hawkish Fed, right? Smaller rate hikes, okay, but rate hikes nonetheless. And we continue to get data to support a hawkish Fed, okay? The thing is, I think the market, once they get their head wrapped around it, that this is the reality, I think the market will continue moving right along. That's just my opinion right now in the short term. I think they just need to know that there's not anything drastic beyond what they're saying is going to happen here in the near future in regards to the size of those rate hikes. So we'll continue to pay close attention. But I think at the end of the day, because you're getting some solid economic data, you have some numbers that are concerning, but overall you're getting solid economic data. So the economy just keeps on moving right along. And that depends on where you are globally as well, right? I'm just talking from the United States perspective. We do have inflation that's still high in the UK, EU, right? So the ECB is continuing to be aggressive, right? They haven't really changed their rhetoric as of late. So still bullish on the euro. But this is where we are in regards to the bond yields in the U.S. and where we are. It's 3.87 or whatnot, and that's sitting pretty high still. So you got your 2-year 4.69, right? So you still got that inversion going on there. So we'll see how that continues to play out. So that's where we are with the U.S. dollar. Any questions? No? David, that is a great idea. And to tell you the truth, I had a backup generator just sitting in my garage forever. And there was this lady online that needed a generator, and I sold it. I sold it for like $2,500, but now look at this. So I think I better make that investment back into that generator. So I appreciate that advice, Ryan. That just confirms what me and you were talking about. That needs to happen. So yeah,
that's fact.
yeah, that's me being short-sighted. Like it's just sitting in the garage, I'm gonna sell it. So, but that's the U.S. dollar. It's funny. My wife just the other day, like, yeah, but don't we still have that generator? I'm like, no, I didn't tell you I sold that, by the way. Like, I thought I did. So put that money in the market. But Aussie Swiss. Let's take a look at it. All right. Looking at it overall, okay, huge correction. But I want to take a look at where it came from, right? Where the correction came from. This came from an 80-20. Clear as a huge move out of the zone. Okay, on this, right? So you take it off that 127, you come down to the lowest point. That's 225 pips back to your 382. Okay, 126. All right, your 61.8, 170-ish. Okay. So what this does is it allows you, when price gets to these extreme levels, and that was up against weekly resistance, by the way, at 65, 62, that through the line. It allows you, right, to be able to trade small and to accumulate positions, right? So if you live a busy lifestyle, like I know a lot of us do, this is where swing trading can really pay off for you when you know, okay, I have an area on the chart that's a major sweet spot area where price tends to react quite a bit, as we see, right? In that 118, 127 zone after a shallow retracement, right? The 80-20. So this is where you can put these trades in, but you don't put it in so heavy that you tie your account up, right? To where you can't get involved in other positions while the price action starts to figure itself out. Because you can see here in this 80-20, it did the dance, right? Danced around a little bit. And you see how we've got price didn't go straight down, right? It pulled back on us, right? Well, this enables you, right? When you trade small and you accumulate positions slowly, it allows you to be able to add to the position and get in on other setups. Everybody follow me on that? Drop me a 2 in the chat. It's a very, very key concept when you're swing trading. Because that, and every once in a while it creeps in, but that used to mess me up, right? I'm getting in too heavy. I'm risking too much. Now it's doing the dance. It's keeping me out of other setups because my margin is all tied up because I'm in. It's too large of a position to begin with. And then I eventually get frustrated, right? Because I'm looking at other moves that's happening faster. And now I'm mad. So then I close out the trade, and oftentimes it was a loss. Like, I'm fed up. It's not moving fast enough. And it's really because, hey, the market's going to move the way it wants to move. We can't control the timing, right? And how long it takes to get from one point to the next. But what we can control is our management. So while it tries to figure itself out and move in our direction, right, based on our technical analysis, and move out of that 80-20 zone, we can still get involved with other setups that may be moving a lot faster. And in the beginning, it's painful. It's like watching paint dry. It's annoying, right? Especially if you have a smaller account and you're trading at micros and you're like, man, like, is this ever gonna happen? And a lot of times that's what triggers you to trade larger. And then you're frustrated and you look back and you're like, man, why did I do that? But over time, it pays off. Over time, it pays off, right? If you just accumulate slowly, grow your account, add money to your account when you can, whenever you have the ability to do so, it will add up a lot faster than you think. It'll add up a lot faster than your money in your traditional savings account, I tell you. A lot faster than that. So I'm just telling you this for if all of you play is this 80-20, you can do well, but a lot of times we get stuck a lot on the time. How long is it going to take? And that's where trading can get frustrated if that's your main focus. So I hope that makes sense. But now with these Aussies, what I'm interested in seeing is, okay, the Fed has laid the pathway forward. We're getting some solid economic data. Like I said, a lot of times that depends on where you are on the globe. But for the most part, we're getting some positive signs, and the markets are still moving, right? So that collapse that everybody was looking about, that possible deep recession that a lot of people were predicting, now more every day people are saying, hey, it might just be soft landing. We might be able to avoid it. Who knows how that turns out? But if the market starts to gain clarity and comes to the realization that this is just the way things are, then you may see a point where this market, right, where the correcting is over and a risk on asset like the Aussie, you'll see it start to gain steam, right? So I've been talking for quite some time now about, prices in here jumping and dancing around. Hey, if we can get the break of this cloud, right, and we get that Kumo twist up ahead and it starts to get bullish, right, and we see that cloud moving to the upside, that upward angle in that trajectory, it may be time for some of these Aussie pairs to get back long, right? But I'm not sold on it until those confirmations happen. So that would be that classic C to D move. You can see we've already retraced 86% of the original AB move. Okay, so it's a deep retracement, but these are the ones I like if we can get price to break back above that cloud and get some confirmation for the long. So that's why I'm paying close attention, even though it's deep into an 80-20. That's why I'm paying close attention to a potential bullish move on this Aussie Swiss. Because if you go to the daily, right, we've already gotten, a test of that 6,300 level, that daily support, close to that 61.8. And you can see how we're kind of holding, right, the 63.57. We're kind of holding above that level in our stochastics in the buy zone. Our 4-hour stochastic isn't. But just being real patient with this Aussie Swiss play. You can see here on the one where you're already starting to get the bounce right to the upside. But I more so want to wait on that 4, right? That 4-hour chart, stochastic here. You see, I want to see what happens with that. Hey, if it never happens and it continues down and it takes out the A, hey, then we wait to make a play from there. But that's where we are now with a pretty deep AB boundary correction on the Aussie Swiss, right? So just continue to watch it. That's a long term play. Any questions on the Aussie Swiss? No. All right. So just continue, right? To put that one on your radar, right? Sit on your hands, right? If you're out of the 80-20, if you didn't get in on the 80-20 before, that's okay, right? Because your first job as a trader, as a money manager, is to preserve capital. So if you're just sitting here watching the chart, you're preserving capital. At some point, you'll have your setup and you'll be able to take advantage of it. So just continue to be patient. All right. All right. Now let's move. I want to take a look at another one on this Aussie yen. Okay, overall, we can see, okay, how it's been bullish, the Aussie. Okay. But we know once price goes up, it has to at some point correct. And we're seeing that correction. So if you come in here and you take a look at the 4, you can see that we've already, right now it's moving sideways a lot, but you can see how overall, right, here's a low, here's your higher low, and then we double bottoms here in the zone. So overall, we're still thinking, hey, bullish. It's just a matter of when it wants to catch that momentum back to the upside. Does it correct further before, right, or do we start to make that now? All this with the odds is if somehow the market moves into a crazy risk-off situation, then it's just going to continue to correct to the downside with a lot of these Aussie pairs. But wanted to talk about this one because it does take a lot of patience, right? But you can see how I'm concerned about my area that I want to trade. Yeah. And this is swinging, right? We know sometimes we get in our scalp mode on the lower time frames and all that stuff. But when you're playing these swings, right, which I think is actually the most profitable way to trade over time. Right? It doesn't seem like it in the beginning because you're trading small lot sizes, depending on the size of your account. But over time, right? Because you're giving the trade room to breathe, you're not using super tight stops and things like that. So if you look at this, right, it's choppy as it is, right? The rectangle we have here, if we put a rectangle around that price action, it did all types of stuff. But all I'm worrying about, is it in my zone? Okay. Do I have my fibs laid out? Where do I want to play my stop? Okay. If you're running tight stops and price starts whipping like that, most of the time you get stopped out. But if you're playing just that traditional swing, right? I'm not worried about, now we all know that these can turn into ridiculous risk to reward plays, but initially I'm not worried about a 9,000 to 1 risk to reward, right? So I'm leaving that stop wide because I know, right, if I do the math, right, and I hit this 127 zone up around this area, right, to that stop, we'll call it 80 pips if we want to, go back down there, we're at 146, 147, almost 150. Okay, so we know that if we play enough of these, you're welcome. You're welcome. So we know if we play enough of these, right, we're in a positive, even if we leave this stop loss wide and we play it right at this 118, 127 zone, we know that we're in a positive risk to reward. Now, the other thing is, okay, well, what's my strike rate? Well, we know that your strike rate on these is not going to be below, right? You take 100, you take 180, 20 trades, 180, 20 setups, period. That's all I'm going to play. You're not going to come in below 50%. And I'm being super conservative. We know why we call it 80-20. So we know we're going to be over 50%. And I know that, hey, I'm putting this in. Maybe it's a 1 to 1.5, a little higher, 1 to 1.75. Sometimes you get a 2 to 1 off of this setup, right? Depending on the fib, sometimes it could be more than that, right? And that's just to the 382, right? It's icing on the cake when we start getting that position to move to TP2, right? So maybe we close out 3/4 of the position, leave a quarter in to try to reach TP2, adjust our stops to break even, okay? Now, people always ask me, what's the trade plan? That's the trade plan. That's it. That's it. Right. That's it for this setup. That's the plan. Right. And your plan may be different. Like I say, like if you want additional confirmations, tighter stops, and you don't want to see the trade float and do all of this stuff, and you're trying to get more exact and precise, that's your trade plan. But our main trade plan is swinging these plays. Leave that aside. Let the trade do it. Why? Because I know no matter how wide that stop is, I'm risking 1% or I'm risking 2%, right? You may say I'm risking 3%. At 3%, I have to lose 33 80/20s in a row to blow my account. Right? We know at 5%, I have to lose 20 in a row. Okay. So think about that, right? Trying to simplify things, right? We're coming to the end of February, and we're trying to figure things out and get more consistent with our trading. Then set buy limits at the D extension. Boom. Yeah, yeah, yeah. So that's thanks for the game. My TV hit from the 80/20. Awesome. Thanks for the feedback. Buy limits at the D extension. Yep, I'm with it. That's exactly right. Right. If you're trading with that trend, set your buy limits and then take it and let's go. Let's go long to C to D. Right. So this is it. Right. And then at that point, right, if you're saying, hey, it's time for the Aussie, right? And that's exactly what you're saying, right? Once we get down into our sweet spot and we're saying, hey, we're still bullish on that Aussie, this is just a correction, then hey, I put my stop below that A, right? And then I let it make the U-turn. Okay. Very, very simple when you think about it. All right. The fib is giving us the setup. That's why we always say in the beginning, right? Hey, helps you determine a direction, where to get in, where to get out, proper risk management. That's it. So these are my concerns, right? Direction that I want to go. 80/20. We've got a buy side fib. 80/20. That means that's counter trend move or correction. I'm trading down. TP levels, I got that with my 382, my 608 and beyond. Stop loss, I got that with my stop at the D. Risk management, I got that because I'm taking my risk percentage and I'm divided by the stop. Boom, that's it. That's it. So here we are at TP1. It did all of this dancing around, right? But when you got your risk management intact, you can care less because you're moving on, looking for other 80/20s and other plays, C to D moves, while this makes up its mind. So when you get these running, right, what you want to see is you're going to have a string of trades running, and you're going to have some in a positive, you're going to have some in a negative, and some in a positive are going to hit target, and it's going to add to the balance in your account. You're going to have some that's still working itself out. You're going to have some hit the stops. Okay. That's okay. Let the trade do what it needs to do. All right. So let's look. I want to take a look at this Aussie NZD. Right. So sometimes I know when we get on here and it can get boring, right? We're looking at the same thing, looking at the price action, right? We're waiting and we're eyeing it up. But that's the game. That's the game when you're swing trading, right? You're gonna be looking at the same stuff over and over and over again, right? So here's our Aussie NZD on the daily chart. Okay. We notice, hey, we've got an 80/20 zone. You got this 110.46. Look how it couldn't close beyond it, right? And then we push down. Okay. So now we're right at this 109.269. So we know once price moves down and it's starting to find that support, we start to work our way down through the time frames to say, okay, what could possibly be happening? Okay. All right, we're not quite at that 50% yet. We're holding this. So this may pull back and continue to the downside based on what we have, right, on the daily chart. But in the short term, okay, you see price is holding in this 80/20 zone, okay, up against that 109.269 daily level. So what we're looking for is, hey, even though from our higher time frame, We're not at this 382 yet, but it might do all types. It may pull back, right? Before that, might find support and pull back and then continue down. It may, think about it, it may say, okay, we're about to get impulsive, and it may just continue to go back up to 110, 469. Maybe you get range bound, right? But the beauty of what we do and how we can go down through the time frames, right? Fractals, and get ourselves in position for things to happen either way. If I'm saying, hey, this is a reaction off this 109, 269 level, then my 1 hour 80-20 is in play. Here's my D extension. That's my stop. Okay. So if I'm in this position, 127 zone, and I'm looking at 32 pips or so, but I'm back up to TP1 at 60 pips, 61, 62, right? Wherever you get in. All right. Your TP2 is 82 pips. Okay. So depending on how you manage that, like, hey, I've made a play on this correction. So the beauty in this is this. If I take this back to the 382, right, I'm good. I've caught pips. TP2, I've caught pips. But if this wanted to get impulsive, right? If this wanted to get impulsive and to make a run long, you're already moving in that direction anyway, right? So that's why sometimes we say, hey, take some profit, let a quarter of it run, see what you can get, adjust your stops, right? So that eventually you get stopped in profit. But if it continues to run, I'm in a position for the long, right? Because we see here on the 4, right, how we've made a solid correction. Our stochastic is in the buy zone, right? So you may see that. You may see this move back up and retest the top of the cloud, retest that 110.46. This, right, we don't control that. We don't control all of that, right? We're not going to lose sleep over it, okay? But if this daily 382 is going to play out, then this same move, right? So it only comes down to certain scenarios when you frame the market out. This same pullback move can be putting you in position for a high price, right? I'm out at the 382. I'm at a high price. It's starting to stall. Price turns over and goes back down, and we eventually get to that daily too. Okay. So that's the thought process behind what we do. Okay. So if I've got a daily 382 here, okay, just like the Ichimoku cloud at a glance, you can know where you are on your levels through all your time frames, right? So this is my daily 382 level. Let's take it down. We see on the 4 hour, it's right here. Oh, nice sweet spot, right? So if it wants to pull back and continue down, that's the daily 382. So we'll type that in. Boom. So we say, hey, we may get this correction, which is why we're playing at 80-20 on the 1. May get this correction, then we could come back down, and then it may be time to buy at that point, right? So we'll see what happens. Here's that daily 382 on the 1. Right? Okay. That's that. That's where we are. Any questions on the Aussie NZD? Yeah. Are things starting to become a little bit more clear? Yeah. So this is why, like, we home in on this, right? There's there's a guy that, and Ryan knows that because I love him to death. Oliver Velez, right, has been on a huge, right, on YouTube and everything. He's been trading since the 80s forever. This man has been teaching the same 2200 crossover for the last 1 billion years. Like, that's what he does. That's it. That's it. So if this is all you do and it makes you money, That's the whole point. It doesn't have to get any more wild and wacky and crazier than this. Really doesn't. Really doesn't. So, all right. That's the Aussie NZD. I want to take a look at this Aussie dollar. Okay. So we see from the weekly, right? It's turning over. We talked about this a while ago, right? Like, man, that's a bearish engulfing candle on the weekly time frame. That's saying something. Even before you may read the fundamentals and everything like that, like, oh my goodness, like that from a technical perspective, that's a sign that, hey, we may see more downside action. That's exactly what we're seeing. Okay. So we've come off, right? We know we had a while ago that double top, seems like ages ago now, off that 71.33 weekly level. And we've been correcting. So of course, on our lower time frames, this is moving bearish. Right? This is moving bearish. This is coming back into the buy zone, right? So this one is going to be quite interesting moving forward. But look, all right. But look, now we know, right? We're seeing, okay, seeing a little bit of a correction. Okay, seeing a little bit of a correction. Now, typically, from what I've seen in the past, is that you'll first get the signs right here on your bond yields first, right? Then you'll start to see it to play over, right, into your currency. So it doesn't surprise me, right, that we're starting to see a reaction, a little bit of a reaction there. Why? We're coming in technically at a 382 anyway, right? So it all comes together. But here's your 80-20, right? Yes, it took forever. But you're going to get to the point where, okay, I've got that single position, right? And your convictions are going to start to get so strong that you're going to say, you know what? You're going to start to have your trade plan evolve as to what, we always talk about managing the trade, right, on the take profit end, right? But then you get to that point where it's just like, I want to manage this trade, right, to where I can add to this position, right? So like on your breaks and your pullbacks, right? So when you see it happening enough, you'll start to get confident that, you know what, I want to add some positions in as this moves down to this 382. And now I'm just accumulating positions, 20 cents, 30 cents here, 40 cents there, right? So as my account balance continues to increase as price moves, now I'm playing on house money. Now I'm playing on house money as I add these positions, because I'm going to start to adjust my stop loss once it starts to move good enough to a good enough level of profit. Okay, so you can see, like, look, all of this is a nightmare when you come into the game. And how a lot of us first learned how to trade was like scalping, playing the levels and things like that. But you can see that through all of these levels, right? And oftentimes, Ryan and I use these levels as potential reaction zones, right? Lower time frame plays, or areas to react to where we may get, in this example, another high price, right, to add to a position if that's what we choose to do, right? But you can see that regardless of how many levels of support and resistance that you had along the way, price still gravitated towards that 382. Everybody follow me on that? Drop me a 4. Let me guys know you're with me tonight. Awesome, right? So we're now at this 382, and we may see a pullback. Okay? So at this point, this is where we're saying, okay, well, I know I'm getting pretty deep in the zone here, right? On this daily, this is 61.8 stochastics in the buy zone. So I'm either out the trade, or maybe, right? Maybe I leave a quarter in, see if it wants to take that ride. My stop's adjusted. Can't lose any money, only gain money on the trade to break even. What I have left remaining, if I manage that right. So maybe we can get it to this 61.8 on the 4. Then I'll have a deep retracement on the daily and the 4, and it might be go time, right? See what happens. But right now, right, you just be patient, right? And you might not even play. You may say, you know what? I don't even like playing C to D swings. Talk to Ryan about that all the time, right? like, man, I can really filter my trading, and just leave it as, hey, I'm playing these 80/20s because in order for me to get a new 80/20, what has to happen, everybody? For that to happen, this trade either has to move to the D extension and we get a new fib, or right, think about how simple this is when you think about it, right? Or from this 4-hour chart, it has to move down and take out the A. And guess what? I'm gonna get a new fib to the downside. And then there's a potential for an 80/20. That's it. That's it. So you may say, I'll let these play out because why? I'm looking at all the currency pairs and then they cycle in and they cycle out. So while this one finishes whatever it's doing, and if I'm out of this trade, then I'm looking for the next 80/20 setup. All right, hope that helps. So that's the 4-hour. I think that was like 240 pips off the 127, bounced around, put you in drawdown, right? See that? But I'm not, look, if it hits my stop, I'm out of 1% or whatever I'm risking. I'm risking 3%. That's all right. I got 32 more trades to go that I have to lose in a row. I'm good. All right. So that's where we are on that. I want to take a look at the sound. The CAD Swiss, right? So this crazy range, right? But we're starting to get some bullish momentum. And this is one that we just track it, right? Tracking it for the long term swing. It's got a ways, it has its days, and then it doesn't have its days, but some long term targets there, right, that we're looking at. But we're moving to the upside. Okay. So take a look at what's going on, right? It's rangy, it's choppy, it's within that AP boundary, but we're moving long now. Okay. We're moving long. So just continue to watch this and see if we can break through these levels and get that C to D move, right? So I wanted to point that out there. Okay. So long term, still looking long. We just needed to break out, right? Break above that 69.33 level, get that D extension, and then beyond to start to chase some of those long term targets. All right. So just keep an eye on that. Right? That's what we mean. You could just, hey, small position, just let it build. So that's the CAD switch. Just wanted to cover that one real quick. The CAD yen. All right. This is a case where whether you're a bull or a bear, you could be winning. Right? And this is what I mean. So this is moving bullish, right, against the yen. But if you come out to your daily, okay, and that last impulse move to the downside, you can see what? You have an 80/20. Okay. So the goal for this is to do what? Continue to make ABCD waves. You got a Kumo twist coming in just up ahead. And we want to get to that 382 target. Okay. Okay. So you can see we have this sub fib on the daily run, right? Making all it is saying is what? We're making higher highs and higher lows. Look at that, right? Don't let the fibs throw you off. It's still about the price action. There's a break and a retest. This is a break. Are we going to correct back to the downside before we get long? Right? At least that's the trade I think. Okay. So if we come down though, and we look at this, we see the 4, right? This is the momentum is gaining. Okay. There's the extension. But on the 1, okay, look at what we got. We saw that sub fib on the daily, right? It ran a smack dab into an 80-20 on the one. Okay. So this is a prime example as to whether you're a bull or a bear, depending on what time frame you like to trade on, you could be winning. Either way. Because it all comes together, right? Correction to the downside. And if that narrative from the higher time frame continues to play out, then we get back long eventually. Okay. Okay. To your daily 382 or whatnot. See? It's a beautiful game. That's the CAD yen. So here's the deal. If you say, you know what, I only want to stick to that narrative from the higher time frame, and I want to chase this 382, then if I don't want to take advantage of this 80-20, you could. But if I don't, then you wait for a low price, and I'm eyeing this up to say, okay, long as price doesn't take out this A, probably going to go my way, right? I'm going to continue to make that climb. See? Here. Right? That's that. All right. That is the CAD yen. All right. So let's look at the Swissy yen, right? Been waiting. Patience is action. Hey, it's moving up. Right? It's moving up. Looking at these waves, hey, we ran into a D extension, didn't we? All right? Broke the cloud. Ran into a D extension on the daily. Okay. Had multiple members say, what? I'm waiting on this one. I'm waiting on this one. All right. Good confluence daily 1.618 D extension with the 127, right? 80-20 zone. And we're already correcting to the downside. Brandy's in it. Congratulations. Awesome job. It's good work. All right. You're welcome. And great work as a team, right? All these members say, hey, look, did you see this? Right. That's what it's about. So even if, okay, right into that support, that's 161 pips. Do you know people don't catch that in a month? Right. Beyond the fact that, they say what most traders fail, 90 some percent, whatever they say, right? And a lot of times we feel like you fail. A lot of times they fail because they quit. That's why Ryan always says, give yourself some grace. Right? They quit because the expectations weren't right to begin with in regards to the time that it takes and to really look at trading as a profession. Right? So a lot of times it's improper expectations. So then you don't have the longevity, right? You don't have the mental capacity to stay in it because of what your expectations were from the jump, right? A lot of times that's the issue. But I hope a lot of those people who do quit, they give it another chance down the line. So that's that move, and we're not even there, right? We're not even 2 or 382. We're just down to a level of support, and you're already up. So I wouldn't blame you if you. I couldn't blame you if you said, "Man, give me my money." Give me my money right now, right? If you're working your risk management out, you're over 100 pips, right? Or taking some money off the table and looking for pullbacks, however you want to manage that trade. But I'm just trying to put it in a larger perspective. Like these setups and these moves and this whole idea behind the inner circle and what we do, right, is not to be taken for granted. Like this is a major, major concept that you all are learning, right? That could pay huge dividends for you, right? But you have to give yourself time. You have to give yourself time. So that's where we are. So we're back down to that support, right? So we know along the ways, right? Depending on how you play this, when you get these long impulse moves, you're gonna eventually get a reaction to the downside, right? We'll eventually get a reaction to the downside, right? This is the 1 hour look, right? It's playing out on both. That's clean, right? You can't make that stuff up, right? Can't make that stuff up. If my stop is up here around the D extension, right? 165, 300, 315, right? Back to the 382. So hey, right? Decent setup so far. Decent setup so far. All right. And you may be trading small, right? And that's fine. It is okay. And you say, man, it went 300 pips and I made $30, right? It didn't work. You didn't punch a clock for it. It's $30. You didn't, you know what I mean? Like, ever since I started trading, I understand the power of compounding. Like, you're not gonna see me walk past a dime on the ground and not pick it up, a nickel on the ground and not pick it up because it compounds. I understand that, right? I didn't used to take cans and recycle cans at the grocery store. I do now, right? I used to work in sports. Used to work with the Pittsburgh Steelers back in the day in sports and entertainment division, and you used to see, right, fans tailgate. They tailgate, and what do? They leave the trash can full of beer cans and everything else. And I used to see it, and this was in my younger years. After the games, you used to see people all around the parking lot, right? All around the parking lot. And these aren't homeless folks either. What are they doing? Grabbing the cans to recycle. Grabbing the cans to recycle, right? It's the power of compounding, right? That's my point. So this does compound, right? And it's a lot less stress. All right. So that's the switch in. Okay. What time is it? 9:55. I want to keep going over these if you guys don't mind. Um I want to look at this Euro Aussie, okay, and what this price action has done. Look at this on the 4. Next up. And I remember my time frame. This is just my long position here. And then on no, this is my 4. So we talked about this one already. So with the 80-20 there, that's what I had in my head here. 80-20 here, 80-20 there. But we talked about that one in the past, right? So good to see it to the upside and to the downside. But on the 4, you can see here now where this is starting, right, to gain some momentum to the upside. And that's the main thing I want to home in on, is to keep, right? So we've got the 80-20s on the lower time frames, but you can see how we got this bounce off this weekly support just ahead of that 78.6, and you can see that we're moving long. So we're on the opposite side of this trend line. So one thing I want to see, right, for you guys to keep your eyes on is the swing maybe for the longer term, right, to the upside. Okay. Right? Maybe choppy for a while, right? The Aussie has the ability to gain some strength, right, depending on what the market's looking like going forward. But we know that the euro is fairly hawkish. The ECB is fairly hawkish. So you can see this is a beautiful move down into the zone. It's a B2C move here. We got a nice deep retracement, and now we're correcting to the upside, right? So now maybe you look to see if we get retest of this uptrend line here and a continuation. All right, so keep an eye on that one. On the Euro Aussie, has made a nice correction. But what I will say is you can see how when we were talking about that Aussie New Zealand pair and how you're in an 80-20 situation on the one on that Aussie New Zealand. And this is what I mean by how it can spark, right? That C to D type of scenario where if price wants to get bullish, you're kind of already in that position anyway. And you see how the A got taken out and we got the price swing. And then we got here to pull back and then a potential continuation now. And this is on the 15. So that same scenario can play out on that Aussie NZD pair we were talking about if that Australian dollar, wants to get strong and continue long against the New Zealand currency. So that's a good example of how that can play out. All three take profits and then a continuation to the upside, taking out the gain on that one. So that's that. I want to check in on this Euro Swissy because I am looking long on this Euro Swiss. That's my idea. You can see here on the daily that we're starting to get this swing, right? I'm thinking long because of the euro. It's bullish. If you come here to the 4, you can see it's trying to peek its head through. We don't have everything aligning yet. This is the daily fib brought down to the 4. So what I'm looking for is a potential breakout here. So here's a 4-hour resistance level here. Right there. So I'm looking for some momentum to eventually happen, right? On this Euro Swiss. It's taking a while. If you come to the 1, you'll see this original setup that we posted a while ago, right? It kind of plays into that narrative. Because on your 1 hour, you have an 80-20 type of scenario setting up. We never did get it to come right into the zone, which is what I wanted to see happen. But you can see how it's trying to move its way up. So these levels here are going to be very, very important. I wonder if it can get through this level. There's that 4-hour there, right above, right below that 382. So that one's going to be interesting. We didn't quite get there, but we're starting to get somewhat of a swing. So just continue to keep an eye on that Euro Swiss. But I am bullish on that over the long term. And I wanted to this Euro GBP continues to bounce back and forth. But this is what I've got going for it on the daily. Right. So we've got a bit of a swing and we're starting to form a low here, which will give us that daily support, which we kind of already have one, but it will just be doubling down in that zone. Now, this here, your 4-hour swing, right? So we're at a 61.8 on this Euro GBP, and I am still favoring that Euro over the pound. So I'm thinking, right, maybe time to get long on this play, right? So, yeah. And if you like using the cloud confirmation, right, on that, you can drop that on and see where you're at. We're definitely not back above the cloud, but we are in that zone, right? Stochastics in the sell zone, right? So we'll continue to be patient, right? On these C to D type plays, right? If you like to play those, just be patient, right? To see how deep it wants to retrace in the zone. Here's a weekly level at 87.21. Not sure if it'll get there, but it will be within the AV boundary. And like I said, there's some daily support there too. And I need to draw in on the Euro GBP. So that's that. I want to take a look at the Euro JPY. This one has been quite interesting. Right. But if we come here to the 1 hour, right? I had this zone marked out because it was just so choppy in the area, right? But we got a bit of a breakout. So you can see how it's just moving sideways. And then we got it to break out above some highs, but we ran right into that zone. And so now I'm thinking, especially if it continues to hold below this. That's a pretty strong bullish candle there that didn't break back through that 142.92 level. So we may get this 382 on this 80-20. Okay. All right. So you come into the level, you come into the zone, 116. You got 222 there. Okay. That's your Euro JPY. Right. So, hey, if it comes back down deep into this level, I am bullish on the Euro. We'll make a determination then if we want to get long. Okay. All right. So that's the Euro JPY. I want to take a look at one last one before we wrap it up. Appreciate you all hanging in there. And let's round out the Euros and take a look at this Euro USD. Because we've come back into, I think we got back into like around 105, back into 106 now. But you can see, right? Major correction on the daily. Here's that weekly that we spotted, that 80-20 on the weekly. So here, that weekly level is 104.83. Okay. Stochastic still in the sell zone from a weekly perspective. And we can see how this was a colossal 80-20 that we've now gotten 2 TPs. Okay. There's that weekly level, and we may be headed there, right? That's a weekly support. That's a weekly 382. Bam. Right. So if you use a tight stop, yep, you got stopped out, and then it broke below. Broken, it retested this zone. Look at that. Boom. And it continued down. If your stop's wide, you're at work, out to dinner, letting price do his thing. That one played out for you. Right. So that one's now down to TP2. 346 pips. Yep. It takes a lot of patience. It takes a lot of time. Right. So that's where we are. Right. So if you just look at price action and levels, okay, and you look at how we teach you how to draw your trend lines. Just follow and look at the price action and how beautiful. It's like art. Look at that. Look how that price action flowed. Right. You go down to your lower time frames, you get even more aggressive than that, right? Because you run your trend lines through your high. Okay. Up ABCDs, and then you start making down ABs. That's it. That's it. Awesome session, everybody. Great job this week. Really, 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 really awesome job, right? See the stuff coming through in the chat, in the Discord again, right? We urge you, hey, put your charts in there, right? Get you some feedback, right? Let everybody give you kudos on the position that you take in the market, even if you're in a demo, or even if you're not in the demo and you're just learning how to mark up your charts, right? That's what the group is for, right? So continue to put in the work. Give yourself some time, right? You'll get it. You'll get it. My dad always taught me, you can read, you can learn. And that's with anything. Ryan, anything to add before we close out, sir?
No, sir. Great session, man. Great session.
Appreciate it. Appreciate it. All right. You hang tight over there, man. Stay warm. We're all praying for you. For those lights to come back on.
Yes, sir. Appreciate it.
Yep, no doubt. And with that being said, everybody have an awesome, awesome Friday. And we will see everybody back here 7 a.m. Eastern Standard Time for the Forex weekly ritual. All right. Good night, everybody.
Good night. Thank you.
Welcome.